Hello everyone, my name is Jeffrey Kennedy and welcome. I'm often asked as editor of Commodity Junctures and Traders Classroom, how do I go about identifying a high confidence trade setup, or how do I make a high confidence forecast? Well, there are several answers to that question, but one answer I would like to share with you today is that I call building a case. Okay, for example, if we take a look at this price chart of cocoa, notice that the sell-off from the recent swing high here into the recent swing low consists of three waves. Well, if you're familiar with the Kennedy channeling technique and also the wave principle, you know that price action contained within parallel lines tends to be a counter trend move, and also too, a three-wave structure typically is either going to be a zigzag or a flat or a variation thereof, all of which are also counter trend moves. So what this allows me to do is basically say or make a forecast in the cocoa market of higher prices moving forward. Okay, but I mentioned something about building a case. What exactly am I referring to? Well, what I'm referring to is that I look at additional tools or incorporate additional techniques to bolster the view, to add confidence to the view, to again build a case. So in this instance here, we're using trend lines and we're using the wave principle to come up with a high confidence forecast of higher prices in the cocoa market. But we can also look at, say, so for example, some momentum tools. Notice on this three-wave decline that we have what we call bullish divergence. As prices have been pushing lower, we don't see that confirmation in, for example, our stochastic. Also too, if we were to take a look at another chart here, this is a candlestick price chart, this is a daily price chart. It incorporates several different tools, for example, a Donchian channel and a dual %R. But what I like about this picture is today's candle, what appears to be a doji star over the last 3 trading days, which is a bullish candlestick reversal pattern, and then the fact that we're also reversing from at or near the Donchian average, which would be that dashed line that you see in the middle. The Donchian channel was developed by an individual named Richard Donchian, who many consider to be the actual father of trend trading or trend analysis. So how do you go about identifying a high confident trade setup, or how do you go about making a high confident forecast? Well, my suggestion would be to build a case. Don't simply rely on a single tool or a single technique. Remember, the field of technical analysis is very rich and very diverse. There are a lot of different tools and techniques that we use as technicians, and a lot of different disciplines. For example, the wave principle is a discipline. Wyckoff is a discipline. Point and figure is a discipline. There are many different ways we can approach the market. So if you're looking at or using a multitude of tools and they are all in agreement, well, that's how you build a compelling case. Thank you, and until later.